Now guys, let's discuss the agenda of this S&P 500 weekly technical analysis. So the agenda, it is simple, and as usual we are going to discuss number one, we will discuss the S&P 500 technical analysis on the weekly chart. Why the weekly chart? Because we want to know what is happening on that the broader scale. Okay, so this is the hawk eye view, right? Then we are going to discuss the recession, the Feds, the PMI. Most important thing, this is the PMI. Then the eurozone inflation and how the eurozone inflation is going to impact the American markets and the overall these the global stock markets, and then the entire so not entire but these the global economies, means the recession again. Then I will give you the support and resistance levels for the S&P 500. And guys, once again, these support and resistance levels, okay, these are not the usual levels that you can find anywhere else. So I've calculated and I did a lot of research to find the support and resistance levels, and that is the reason if I say like 3585, it means 3585. When I say 3675, it means 3675. So that is the reason, okay, means if you are following only and only my support and resistance levels, then also you can make money. Thereafter we are going to discuss the dollar index once again, bond yield, and the inflation. Okay, inflation means the eurozone inflation and the impact of the eurozone inflation on the US inflation. Okay, that will be posted in this month. So as of now, the inflation is 8.3, and if you have subscribed and if you have watched my previous weekly technical analysis, I think last to last week, then I've discussed this the 8.3 in very detail, and I've told you that the 8.3 is the inflation point where we are expecting a reversal, a bullish reversal, right? This means that even a increase of 0.00001% will simply bring down all of the markets heavily, because this will indicate that now the inflation is going to hit the double digit that we have not seen in 40 or 50 years, or like 70, 80 years. Anyways, so inflation is bullish. We are going to discuss that inflation. Then we will talk about this the S&P 500 technical analysis on the daily chart. So weekly chart means that we want to know what is happening on that the broader scale, the big picture, the hawk eye view, and this the S&P 500 technical analysis on the daily chart. So the daily chart means we want to know what is going to happen on Monday, so that will be October 3rd, and until Friday, so that will be October 7th. And then finally I will give you the probable movement of the S&P 500 from October 3rd, that is Monday, to October 7th, that is Friday. And guys, once again, each and every part is very important, and this analysis may be lengthy, and if you want to skip any part, you can skip, that's not a problem. But each and every part contains a tons of information, lot of information that you are not going to find anywhere. So if you think that in this the dollar index, bond yield and inflation, I will discuss only and only the dollar index, bond yield and inflation, no, I will discuss these things and the impact of the dollar index, the bond yield and the inflation on the S&P 500, the Dow Jones, the Nasdaq, and the entire stock market. So this way, okay, I cover each and everything in very detail, and that is the reason this is the movement, whatever you are seeing, hold down and whatever, and this is the only reason why we are able to attain, okay, such a high accuracy in predicting the movement even before the open of the S&P 500, the stock market, the Dow Jones and the Nasdaq. So guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily analysis of the S&P 500, the timely update that will give you an idea what is going to happen in the S&P 500 today, what is going to happen in the stock market today, what is going to happen in the Dow Jones today, what is going to happen in the Nasdaq today. So it will give you an idea, a clear view what you can expect from the stock market, from the S&P 500, from the Dow Jones and the Nasdaq. So these things will be there. So if you want to get this the daily analysis of the S&P 500, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. And guys, other than that, I have made sections of this video, like these section, multiple sections. So whichever section you want to skip, you can skip. Whichever section you want to watch, rewatch, then you can watch or rewatch that particular section. However, once again, it is recommended to watch the entire video to get a good idea what is going to happen, what you can expect from the market, from the stock market, from the S&P 500. So guys, before I proceed with this, the S&P 500 technical analysis on the weekly chart, let me clear this thing, that this technical analysis is not a financial advice of any kind in any form or manner. This technical analysis is not an advice to place your orders or to place your trades in the stock market on a particular price level or strike or whatever. This technical analysis, as the name says, the technical analysis. So I only consider my technicals. I heavily consider my technicals when I analyze. Other than that, I look into the data. Data means the inflation, the PMI, the CPI data. I look into this data and then I relate that data with my technicals, and when these things are a perfect fit, then I tell you, okay, this is how the S&P 500 or the entire stock market is going to behave. Now, whether you are making 1000% profits within a day or you are seeing 20% losses within a day, so these profits or losses are all yours. I have nothing to do with these, the profits or losses of any kind, because I do not know how you are going to interpret my technical analysis. Now guys, let's begin with the S&P 500 technical analysis on the weekly chart. Guys, this is the weekly chart of the S&P 500. So let me write it down, the weekly chart. W as in weekly. So weekly means that one candle represents 1 week, not 1 day or 1 hour or 1 minute. One candle means 1 week, one entire week, Monday to Friday. So when we look into the candle, this is a perfect candle, a very good candle. If you see, so if you see that it tried to move up, but then eventually it gave up and it came down. So what I told you in my previous technical analysis is that because we have seen that the S&P 500 has hit its 200 week EMA. The S&P 500 has hit its 200 week EMA in the week of June 13th. Okay, so that was the first hit. Then there was a reversal. Then it came down. Then in the previous week, it was able to close above this, the 200 week EMA. So what was this? This was the trap. In my previous weekly technical analysis of the S&P 500, I told you this is a trap, because the closing of the S&P 500 means the weekly candle was just above the 200 week EMA, and the purpose of this closing was to tell the retail traders, again the retail traders, okay, they have a lot of problems. So the purpose was to tell the retail traders that, see, because the S&P 500 was able to sustain, close above the 200 week EMA, this means that there is going to be a reversal. And on Monday, indeed, they gave a small reversal. So that reversal was not for the bulls. That reversal was just a trap. This was the trap that I have already warned you in my previous weekly technical analysis. Other than that, I told my community members that, see, today means on Monday we are going to see a retrace, and whenever you see a retrace and it is going, and whenever it hits our resistance levels, okay, 3735 or this the 3790, and whenever you see that it is struggling, no problem, go bearish, because it is going to come down, and it came down. So I think it was like 4 out of 5 days my community members, they have made money 4 out of 5 days. Okay, anyways, so this is the market movers, the market manipulators. Okay, they willingly do, you know, these kind of things. They mark the close. So this is what, this is a manipulation technique that we call as mark the close. Mark the close. Okay, means they willingly close the S&P 500 or the Dow Jones or the Nasdaq or the stock market at a particular price that gives, you know, some kind of hope or fear to the retail traders, and the retail traders, they act accordingly. And that is where these the market movers, the market manipulators, they trap these the retail traders, and when the retail traders, they lose money, the market movers, the market manipulators, they make money. Anyways, we have discussed this thing a lot of times, okay, in our previous weekly technical analysis, so we are not going to discuss again and again. Okay, so let's focus on this, the candle itself. So last week, last week I told you that if you think that it is going to move up, then no problem, let it move up, do not try to be bullish, do not enter. But whenever you see that it is struggling, go bearish, because eventually it is going to come down. And this was the picture, this was the exact picture from the previous weekly technical analysis. And why we were confident? We were confident, number one, because this was the second hit. This was the second hit. So second hits are not sustainable. Okay. Other than that, if you notice, the open of the S&P 500 on Monday was 3683, approximately 3683, and the 200 week EMA, it was at what? It was at 3685. As of now, the value is 3683.17. Okay, because the candle means the S&P 500 has came down. Okay, that is why, okay, we have seen this, the difference in prices from 85 to 83. Anyway, on Monday, the open was below the 200 week EMA. So on Monday, this thing itself was very, very clear. No matter what, the weekly candle will be a red candle. Means on Friday, there will be this the red candle closing. Means whatever happens, irrespective of whatever happens, we are going to see a red candle. And in my final update to my community members, okay, I mentioned this thing. So there was one of our members, so he has asked on Tuesday, on early morning Tuesday. Okay, so Tuesday means when the movement was around this level. So on Tuesday, he has asked that what are the chances that we are going to see a bear candle. So I told him that the chances of seeing a weekly red candle, weekly bear candle are more than 70%. Okay, are more than 70%, means 70 to 80%. And indeed, there was a red candle and it was like, almost 100%. Anyways, through this technical analysis, I'm not doing anything special, okay, or anything different. I am just looking into my technicals, and I am analyzing the open, the close, the candles, the technicals, and accordingly I'm giving you the movement. And accordingly, I'm giving these the daily analysis to my community members, and that is the reason my community members, they are making money. They are making money. And the good thing is, other than the money, they are not falling into the traps. Now they know very well in advance where are the traps, what kind of trap will be there, what will be the shape of that trap, when that trap will happen. So they know these things very well in advance. So once again, if you want to join my YouTube community, then I have given the link in the description and also in the comment section. Anyways, now this is a heavy bearish candle, heavy red candle, heavy bearish candle. So what it means, if you see the closing, the low of the candle was at what was the low? The low was at 3584. So the low was at 35884 and the closing was at 3585. This means that the closing was almost the low. Okay, what it signifies? It signifies on Monday either we are going to see a gap down open, or irrespective of the open, we are going to see this the bear trend first. Okay, so this bear trend may be there for 5, 10, 15 minutes, 1 hour. Okay, so see the duration of this, the bear trend or the fall, that's a different thing. But what is clear is that on Monday, on October 3rd, in the S&P 500, we will see that there is a gap down open in the S&P 500, or irrespective of open, the S&P 500 will first come down. Later intraday, there may be a retrace, or there may not be a retrace. That's a different thing that we are going to discuss in the next part of this video, when I will do the S&P 500 technical analysis on the daily chart, right? So as of now, through this candle, this is clear, right? Now let's do the technical analysis on this, the weekly chart of the S&P 500. So technical analysis, nothing new, nothing has changed. First comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed below the lower band and below the median of the Bollinger Band, this means that S&P 500 is clearly bearish through the Bollinger Bands, right? Now, next comes the moving averages. There is a clear fan out in the moving averages. And secondly, the S&P 500 has closed below all of these the moving averages. This means that the S&P 500 is clearly bearish through the moving averages. Then comes the Ichimoku. Because the S&P 500 on the weekly chart has closed below the Ichimoku cloud. Okay, this means that the S&P 500 is bearish through the Ichimoku cloud, right? Now let's see what other technical indicators are saying. First comes the MACD. So there is a clear crossover in the MACD and the signal. So the signal has crossed over the MACD, and now the directional MACD is bearish because the MACD is less than the signal, right? Now comes the second thing. The second thing, that both the MACD and the signal are negative on the weekly chart. So this is another confirmation that the S&P 500 or the SP500 is clearly bearish or heavily bearish through the MACD. Then comes the stochastic RSI. Stochastic RSI, the K channel is less than the D channel, nothing new. Again, the S&P 500 is bearish through the stochastic RSI. Now, there is a point that we must consider. In the next week, in the coming week, in the week of October 3rd, if there comes another bear candle, or if initially if the S&P 500 comes down, means like for 2 days, for 3 days, in that case, what will happen? In that case, on the weekly chart, the K channel will hit the zero. It will hit what? It will hit the zero. Zero means the saturation. Zero means the reversal, right? This means that whatever we are seeing, this is the bear trend. This bear trend can be over when we see that S&P 500, it is further coming down, and the K channel of the stochastic RSI is zero, and then only we can see a reversal. Otherwise, if we see a reversal or a retrace before, even before the K channel hits the zero, that means again an opportunity to go bearish on the retraces. Simple. So if you are my YouTube community member, then you need not to worry, because through the daily analysis, okay, I will tell you that on what particular day, like Tuesday, Wednesday or Thursday, the K channel is zero, and we are going to see a reversal, a good reversal. So as of now, the S&P 500 is bearish through the stochastic RSI. Then comes the divergence in the closing prices of the candles. It is normal, completely normal. Then comes the volatility. Volatility is still increasing, and it is already and it is trading like more than 90% of the all-time high level. Means the S&P 500 and the stock market and the Dow Jones and the Nasdaq are all heavily volatile. And this volatility is because of the fear. Fear of what? Fear of the inflation, fear of the Feds, right? So what we have seen on the weekly chart is that the S&P 500 is clearly and heavily bearish on the weekly chart. Simple, very, very clear. Now guys, let's move on to our second part, the second part of the agenda, and that is the recession, the Feds, the PMI, and the Eurozone inflation. So I will tell you that how these things are going to affect the S&P 500 and the entire stock market and the Dow Jones and the Nasdaq. Now guys, in order to discuss the PMI, the inflation, the Feds, the recession, and the Eurozone inflation, etc., I'm going to use the US Chicago PMI, and the symbol is USCPMI. This is the symbol of this, means this is the ticker, right? So if you want to analyze yourself, then you can also analyze the same. Okay. So now if you notice this is the PMI data. So okay, first of all, what is the PMI data, and why we are concerned about the PMI data, why we are even discussing the PMI data, okay, and why this is very, very important. See, economics. Before I tell you this thing, okay, let me clear this thing that I'm not an economist, and I have never ever studied economy, okay, in my life. Okay, whatever I have learned, okay, is through my analysis, okay, and that's it. So what I've learned is that the economy, okay, it works through the two things. Okay, this is the supply and this is the demand. Supply and demand. In simple words, in simple and plain words, supply and demand. Okay, whenever the supply is in excess, okay, and the demand is less, in that case the prices drop. Whenever the demand is high and the supply is less, in that case the prices increases. Whenever the supply and demand are almost same, in that case everything is good, economy is doing well. And now comes the PMI, the same thing, supply, demand, and the economy. PMI means the manufacturing, okay, sorry, the manufacturing. So there are factories produces, okay, some items, some products, right? So when this the PMI data, when this PMI data it comes down, what it indicates? It simply indicates that the demand, the supply, the manufacturing, the inventory, okay, the order sheet, each and everything, okay, it is declining. It is declining. That is the reason the PMI it is coming down, because there is a decline. There is a decline in the demand. See, we are already in the recession. The Feds may announce this recession, may okay, maybe like like after 2 months, okay, after, or the next year. Okay, so that's a different thing. But I'm telling you, and I've confirmed the recession in the month of April this year, that we are in the recession. Now, because we are in this the recession, okay. Now we are seeing the impact. Impact is what? So earlier you means see, when everything is good, in that case, okay, you want to buy expensive items, like you want to buy a car, maybe a Tesla car, okay, maybe any other car, okay, a very costly car. You want to buy real estate, you want to buy the luxury items, you want to spend the money on unnecessary items, right? So when you want to buy, okay, this is the costly car, okay, this is the luxurious car. So what happens is that that company it produces more cars, because there is a demand, right? Now you also need to consider the fact that maximum number of, okay, these the costly items, okay, they are loaned. They are loan, means people opt for the loan to buy these the luxurious items, okay. So I'm not saying 100% loan, okay. So I'm saying, like, more than 70% loan or more than 80% loan, okay. Not everyone is capable of buying, this okay, a car that is worth $200,000. So not everyone can buy or pay $200,000 in cash to buy a car, right? So that is why people they go for the loan. Not everyone is able to pay $1 million or $5 million, okay, for a property, okay, for this the real estate. That is why they go for the loan, right? Now, because the Feds are increasing the interest rates back to back, 75, 75, 50, okay, so they have increased the interest rates, and they are further going to increase, okay. So because the Feds are going to increase the interest rates, this will impact the banks. See, so you need to understand that how the system works. So the Feds, okay, they take care of the money, right, the flow of the money, etc. So the Feds they give the loans to the banks, okay. Feds they give the loan to the banks, okay, sorry, the banks, okay. And then the banks they give the loan to the consumers. So these the consumers may be the individuals, okay, or the businesses, right? So now the Feds are increasing the loan rate that they give to the banks, and that is why the banks are forced to increase the interest rate. And because the banks are raising the interest rates heavily, because the banks have to make money, okay. See, the only source of income to the banks, okay, is through the interest that they earn from the consumers, the individuals or the businesses. And okay, and whatever money that they are getting from these the individuals or the businesses in the form of monthly installments or whatever, then they keep, okay, then they keep the profit, and then they repay the money to the Feds, because whatever money they have, it is from the central bank, okay. So if the central bank is giving them the loan, okay, or the money at 2%, then they will pass on it like to like 4% or 5%. So they will give back, okay, this the money at 2%, and then they will keep the 2% for the operations and each and everything. And that's exactly the point where the problem is seen, okay. Because the Feds are raising the interest rates, banks are also raising the interest rates. And because, see, and other than that, what is happening is that these the businesses, okay, businesses were taking the loans earlier, okay, to run their operations. Now because these the loans are getting costlier, so the businesses they are reluctant to go for these the loans. Because the businesses are reluctant to opt for the loans, this means that they have to cut the cost, okay. And how they are going to cut the, okay, and how they are going to do this thing, okay, the cost cutting, they are going to fire the employees, okay. And they will, so for example, there is a restaurant, okay, and this restaurant now, so earlier there were a staff of 10, So now this restaurant will work with 6 or 7, maybe like 5 staff. Okay, and also the menu. So earlier there was like these 50 items. Now this 50 will be reduced to like 40, 30 or 25. Okay, so because everyone has to do this thing in order to survive, because people are losing job. Okay, because people are seeing that the economic situation is not good, so they are not buying the expensive item. Other than that, the businesses, they are also doing this, the cost cutting. And the recent example was Google and the Apple. So when these are billions dollars, so when these the $1 billion companies or the $1 trillion companies are doing this, the cost cutting, then you can yourself think about the small businesses. So now guys, I hope now you have understand, okay, this thing, the cycle, the banks, the rates, and why the things are slowing down. Okay, now let's talk about the technicals. See, I'm a technical person. Okay, so I always relate whatever is happening, okay, to the technicals. If you see, this was the previous support. Okay, and the previous support was at 43.70, then the low was 43.20. This is what, this is 45.70, and the previous support was at 43.20. This means that in the next month also the PMI data is going to come down. Simple, no rocket science, because it has to respect, it has to hit, because see, it has already came down, okay, a lot. So now it is going to come down further. In the month of October, this will be coming down to hit the 43.20. Okay, and now see, this is the reason why I told you that we know what is going to happen, what are the sentiments in advance through our data, the data that we analyze. So this means that in the month of October, it is going to come down to 43.20. So this is kind of certain. Okay, because it is going to come down to 43.20. Okay, this means that in the month of October, in the month of October also, the bearish sentiments will be there, the heavy bearish sentiments. Okay, now these bearish sentiments will be countered by the fact that the Feds are not going to raise the interest rates in the month of October, because the Feds will raise the interest rates in the month of November, right? So this fact will be countered by this thing, that Feds are not going to raise the interest rates in the month of October. This means that a reversal will be there in the month of October, or a short-term bull trend will be there in the month of October. So when I say a short-term bull trend, there will be a reversal, okay, to the levels where the SP 500 is not expected to exceed this level, 3840. Okay, so with this, okay, so definitely there will be some manipulation. Without manipulation, you cannot move up the S&P 500 or the entire stock market that much, right? So there will be certainly a manipulation, but that's good. We know okay, in advance, okay, what they are going to do. So there will be manipulation, okay, and then it will be heading back to what? Back to these levels, okay, or the previous level. So the previous zone will be, this means that if the S&P 500, if it further comes down, in that case, it will be reversing to this zone only, okay, not to this one. So there will be a short-term bull retrace. See, I'm not saying that the trend will be bullish. No, I'm saying that the short-term bull retrace, that will be there for 2 days, 5 days, 7 days, for 2 weeks. Okay. So, but the trend will remain bearish. Okay, the trend will remain bearish. Simple. So, if you are my community member, okay, then I will tell you when to go bullish. Okay, when actually to go bullish. So first, let the S&P 500 form its new low. That I'm repeatedly telling you for last 4 or 5 days, that the S&P 500 is trying to find a new low. Okay, and the new low is still not there in the picture. So once it has found this the new low, then I will tell you, okay, and accordingly, okay, you can go bullish, means a short-term bullish, and you can cover that that particular portion or that particular part. So this is one part, 43.20. Now there is the second probability that it can even breach this, the 43.20, if the what was that? Okay, so if the PMI in the month of October, if it breaches the 43.20, in that case it will be heading to the lowest levels that we have seen in what, in May 2020. Okay, during this, the initial phase of this, the COVID-19. Okay, and historically we have not seen this thing. Okay, yeah, so last time we have seen these levels in 2008, in this okay, in that the great recession in 2008. Okay, So anyways, you need not to worry about okay anything, because this is the recession. We are in the recession. Okay, and recession does not mean that you cannot make money. You can make money, just like my community members, they are making money. Okay. So recession is good when you know what is going to happen and when it is going to happen, and you can make money. Okay. Anyways, so if it breaches the 43.20, in that case the sentiments will be heavily bearish, that now it is going to hit the lowest levels that were seen in the month of May 2020 and in the Great Recession of 2008. Okay, means so you can say like by December, yeah, so by December 2022, okay, or by November 2022, okay, we can see that the PMI is hitting those levels, okay, these levels, okay, and then the historic the levels that were seen in the Great Recession. But guys, you need to understand that during the Great Recession, the recession was already there. It was officially announced. Everyone knew that there is a recession, and then only okay we have seen that it was there. Okay, like this thing. As of now, the Feds have not accepted the fact that we are in the recession. So what does this mean? This means that this time we are going to see a further downward movement. Okay, so there will be a breakout of this level. There will be a breakout of this level, and so this will be in my last weekly technical analysis. I have told you that we are expecting a great recession. Okay, so that will last for like 2 to 3 years. Okay, but again that does not mean that you cannot make money. You still can make a lot of money, okay, provided you know what is going to happen and when it is going to happen. Okay, anyways, this is the story with the PMI and each and everything. Now the inflation and the eurozone inflation, the inflation has hit 10%, and winters are coming. This inflation will further increase. There will be a rubbing effect on the US inflation. US inflation is at 8.3, which is further going to increase, and I've shown you just like this. Okay, I've shown you through the technicals why it is going to increase. Okay, if there comes a 0.00001% increase, then also we will be seeing that it is going to hit the double digit. Okay, so be ready to see a great recession. Okay, so overall the picture is that the things are bad. The Feds are going to raise the interest rates because they can't do anything else. This is the only option to raise the interest rate, because they have created a problem. Now guys, other than that, let me add this thing. Now what I feel, okay, see, this has nothing to do with the technical, but what I feel is that the Fed chairman, the present Fed chairman, soon this the present Fed chairman, either he is going to resign, or he will be replaced. Okay, this is something that has happened, okay, 40 to 45 years ago, when the same kind of situation was seen. That time the current Fed chairman, he was saying that no, okay, we will be able to fix everything, but rather he has failed. Okay, and everything means the situation was extremely bad. Then okay, the president at that time, okay, he brought in someone else, and then that person simply stopped the flow of the money in the economy, slowed down each and everything. There was a long recession. Okay, so similarly we are also going to see the same thing. So this is what I think. Now guys, let me give you the support and resistance levels. And guys, once again, if you have not subscribed to my channel, then please subscribe the channel. And if you want to join my YouTube community, in order to play safe, in order to make money, in order to survive this recession, okay, in that case I have given the link to my YouTube community in the comment section and also in the description of the video. Now guys, we are going to discuss the support and resistance levels for the S&P 500 for the coming week, that is for the week of October 3rd 2022. So the support and resistance levels, okay, as of now, let me tell you this thing. So this was 3735, and then the zone and the previous zone. Okay, and okay, fair enough. So a retrace, okay, as of now, if there comes a very heavy bullish retrace in the S&P 500, then it should be limited to 3790 at most 3790. Because if I see the closing, okay, of this candle, and then this upward movement, that will be 5.73. Well, no, this will be too much. So 3790, okay, as of now it is not expected. Okay, so yes, we can say 3735. 3735. Okay, so this will be good. Yeah, and this will be enough. Okay, then so this is the resistance. 3790 is the resistance, 3735 is the resistance, 3710 is again, okay, a good resistance. Then 3675, okay, it is a resistance. Then we have 3630, 3630. Now 3630, 3630 and 3675. So these not just 3675 but 3710. So you can say, like, this particular this thing, okay, so this is a zone, okay, a very good zone, okay, because 1 2 3 4 5 6 candles, okay, so means there are billions of dollars in this zone. There are billions of dollars in this particular zone. Okay, now this means that whenever, see, as of now we are anticipating a fall and then it will come down. So whenever there comes a bullish retrace in the S&P 500, this retrace will be limited to this particular zone. At first it will be limited to this particular zone, that is from 3630 to 3710. Okay, and once and if the S&P 500 is able to breach this particular zone, then only we can expect a further movement towards 3635 and then 3790. That's it. Okay, not much. So this is with these the resistance levels. So these are resistance levels. Now let's talk about the support. Okay, so there is one more resistance at what is this? This is 3600. This is 3600. Okay, then comes 3585. Okay, a good support. Sorry, yep. So 3600 is a resistance. 3585. Okay, it is a good support. Then we have 3577 support, 3563 support, 3525 support, and then comes the next support at 3500 itself. 3500. So if you have watched my technical analysis for this, I guess the second week of the previous month, okay, then I mentioned that we are heading towards 3500. Okay, so we knew that that this thing is going to happen, and whenever it comes, so it will come down to these levels. So now the 3500 is in picture. Other than that, okay, see, this is this is not the end of the fall. Then comes 3475, 3445, 3415, and finally we have 3400. Now, why I am saying that not 3500 but the 3400? Because 3400 is the level. It was the all-time high of the S&P 500 in the month of February 2020. Earlier, this was the all-time high. This means that whenever the S&P 500 comes down, that previous all-time high is going to give some good support to this particular the S&P 500. Anyways, I will talk about, okay, these things, the probable movement of the S&P 500 in the coming in this when we will discuss this, the S&P 500 technical analysis on the daily chart. Okay, so as of now, these are the support and resistance levels. Now guys, let's talk about the dollar index. The next part of the agenda is the dollar index, the bond yield, and the inflation. Okay, now this is the dollar index. So why again and again, okay, we are discussing this, the dollar index? Because the dollar index, it is impacting the stock market and the S&P 500 and the Dow Jones and the Nasdaq, okay, very heavily. So previous week I told you that because it is moving up, this means that it will be that it will be further moving up and then it will cool down. Okay, in that week only, and you can see it moved up and then it cooled down. Okay, anyways, as of now, what we want to see is that, or what we need to see is that the dollar index has found very good support above this the moving average. There is no change in the technicals. Okay, other than this, the stochastic RSI is bearish. Other than that, all of the technicals are bullish. But because there is no change in the MACD, this means that if there comes a bull candle on Monday in the dollar index, this means that there will be a bear candle in the S&P 500 and in the stock market on Monday. Okay, a bull candle here and then this. Okay, this is the reciprocal. Effect of the dollar index. So again guys, what is the dollar index? Dollar index means when we measure the strength of the dollar to some currencies. What currencies? The eurozone currencies. Okay, means the euro itself, then the pound sterling, then the Swiss franc, then the yen, and two other currencies. Okay. So I've discussed this thing, okay, in very detail in my previous weekly technical analysis of the S&P 500. So now, okay, so what we need to see is that if the dollar index is able to hold above this the moving average, and if it does, then it is further going to be bullish. And because it is going to be bullish, the stock market, the S&P 500 will be bearish, means come down. As simple as that. Okay, the same thing is happening in the bond yield. So when we talk about the bond yield, you can see a heavy bullish movement, then a cool, okay, there. So it has cooled down, and then now again it is moving up. Okay, so bond yield and bond prices, they they work inversely. So when the bond prices comes down, the bond yield increases. And why the bond prices comes down? Because there is a very heavy demand of the bonds. Okay, and people want to buy these the bonds, okay, at some discount. Means there is a lot of thing, okay, with this the bonds. So all you need to do, or all you need to understand is that if the bond yield increases, this means that there is a very heavy demand of the bonds. Means the big players, the hedge funds, they are looking for a safe haven. A safe haven. They want to park their money. They want to park their money in something that is more reliable. And bonds are more reliable. So we have seen that the bond yield is increasing, and that the dollar index is expected to increase. So that will further trigger selling in the stock market and in the S&P 500 and Dow Jones and Nasdaq. Okay, this is with this the bond yield and this and the inflation. We have already covered the inflation in the part, okay, that where we have discussed is the PMI, right? Now guys, I'm going to do this the S&P 500 technical analysis on the daily chart. So let's see what the technical analysis on the daily chart is saying about this the S&P 500. So guys, before I do this the technical analysis of the S&P 500 on the daily chart, I want to share this information with you that if you also want to play safe, if you also want to avoid falling into the traps, and if you want to know the movement of the S&P 500 and the stock market very well in advance, that will help you to make money. In that case, you can join my YouTube community. And in order to join the YouTube community, what you need to do, I have given the link in the description and also in the comment section. So once you click on that link, then this my YouTube channel page will open. On this page, you will see that there's the join button, JOIN, join button. Once you click on this the join button, so once you click on that the join button, then this pop-up will open. In this pop-up, you will see that there are two options: only one midweek update and all midweek update. So what is midweek update? Midweek update means the daily analysis of the S&P 500. So when I say only one midweek update, I mean this means that you will get the analysis of the S&P 500 only on Monday. And if you go for the all midweek updates, this means that you will get the daily analysis of the S&P 500 from Monday to Friday. Means each and everything, the videos, the posts, the notes, okay, each and everything, you will get that from Monday to Friday. So that is all midweek update. And if you see that more than 97% of my members, they have opted for all midweek updates, means they are getting these the daily analysis of the S&P 500 from Monday to Friday. From Monday to Friday. So guys, in order to get the daily analysis of the S&P 500, the daily updates, text and these the videos, you can opt for the all midweek updates. And guys, once you have joined my YouTube community channel, then you need to visit my YouTube channel, and particularly this the community page. So all of the updates will be there in this the community section. All of these the text updates and all of these the video updates, each and everything will be there in this the community section. So guys, whenever you want to join, you are very welcome. Now guys, let's do this the S&P 500 technical analysis on the daily chart. So first comes the candle itself. The candle, if you see that this is a heavy bear candle, this is a heavy red candle for the S&P 500, and the same heavy red candle is formed for the Dow Jones and the Dow futures and the Nasdaq, means for the overall stock market. Okay, What it indicates? It indicates that on Monday either we are going to see a gap down open, either we are going to see a gap down open, or irrespective of open, the S&P 500 it will come down. Now let's talk about the technicals. So the technicals, again the same thing as usual. Okay, technicals. First comes the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 on the daily chart has closed between the lower band and the median of the Bollinger Band, this means the S&P 500 is bearish through the Bollinger Band. The SP 500 is bearish through the Bollinger Bands. Then comes the moving averages. So when you look into the moving averages, clear fan out, and the SP 500 has closed below all of the moving averages. This means that the SP 500 is bearish through the moving averages clearly. Then comes the next part, that is the Ichimoku cloud. Ichimoku cloud. So if you see that the S&P 500 has closed below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud. Now comes some other technical indicators. First comes is the MACD. MACD is less than the signal. There is not much difference. This means that the S&P 500 is bearish through the MACD. Secondly, the MACD and the signal both are negative. This means that MACD is heavily bearish. It is heavily bearish, right? Anyways, then comes this the stochastic RSI. Stochastic RSI, the K channel is 18 and the D channel is 14. Okay, so there is not much difference and there is not enough momentum. This means that if on Monday if there comes a bear candle, then there will be a crossover in this the K channel and the D channel, and again the stochastic RSI will be bearish. As of now, there is not enough momentum, so we will say that the directional stochastic RSI in case of this the S&P 500 is bullish. However, momentum wise, the stochastic RSI for the S&P 500 is bearish. Then comes the divergence. Divergence is normal. Oh, sorry, the divergence is not normal. Not normal. Divergence is coming down, and it is giving an indication that either means not either, but soon the S&P 500 is going to hold or is going to find a new low. Okay, if not a new low, then it is going to hold. It may be like Monday, Tuesday, Wednesday, but it will be very, very soon because the divergence is saying so. So guys, again, if you are my YouTube community member, then you need not to worry about it. Okay, because through these the daily updates, I will tell you what is going to happen and when it is going to happen, and accordingly you can plan your trades. Okay, so you need not to worry about this. Then comes the volatility. Okay, fine. The volatility is increasing. Volatility is increasing. This means that now the S&P 500, entire stock market, and the Dow Jones and the Nasdaq, okay, the volatility is increasing. Okay, means everything is volatile, especially this the S&P 500. It is volatile. So now guys, what we have learned through this the technical analysis of the S&P 500 on the daily chart, that the S&P 500 it is bearish or heavily bearish on the daily chart, and also soon there is going to be a situation where the S&P 500 and the entire stock market is going to hold, or we are going to see a reversal. Simple. Okay, so this was the S&P 500 technical analysis on the daily chart. Now comes the last point of the agenda, and the last point is the probable movement of the S&P 500 in the coming week, like how the S&P 500 is going to act or behave in the coming week. So guys, once again, if you have not subscribed to my channel, then please subscribe the channel. And if you want to join my YouTube community, then the link is in the description and also in the comment section. So now let's discuss the probable movement of the S&P 500, how the S&P 500 is going to behave or act in the coming week. That is the week the week of October 3rd 2022, means from October 3rd, that is Monday, to October 7th, that is Friday, right? So the very first thing that we know is that on Monday either there will be a gap down open, or irrespective of open, the S&P 500 will first try to come down, right? Done. Now because the divergence is saying that it is that the divergence has fall, okay, to the historic lows, okay, sorry, not exactly the historic lows, okay, but it is coming down to the historic lows. This means that if there comes one or two, okay, maybe like two candles, okay, I think two or three candles will be enough. So if there comes these the two or three candles, in that case what will happen, the divergence will be hitting the historic lows. In that case there will be a halt, there will be a halt, or there will be a hold, and then what will happen for 2 to 3 days, okay, it will be there, and then we will see a reversal. Okay, now the reversal to what level? Reversal to this particular zone. Okay, I told you earlier, this particular zone, and the lower band of the zone is the 3000, what was that, 3630. This will be 3630. Okay, and also guys, do not forget that we have this the 200 week EMA at 36 what level, sorry, it is at 3683, 3683. Okay, this means that if the S&P 500 after holding, if the S&P 500 try to move up, then it will be having the potential to move up to what, to move up to 3683. That will be the 200 week moving average. Now after hitting the 200 week moving average, then we can see a struggle. Whenever there will be a struggle, a confirmed struggle, then it will further come down and it will begin its journey towards 3400. Okay, then in the zone of 3400, okay, now this will be a wide zone. So I will discuss this the wide zone, okay, in next week. Okay, and if you are my community member, then I will tell you, okay, the day it will be happening. Anyways, so it will be coming down, okay, to this level. So this is the first and the most likely scenario. So if the S&P 500 try to hold, then what it can do, that it can come down, okay, and most likely it can hold at this level. This is what, this is 3526 or 3525, simple. Okay, so it can hold, okay, at this. And again guys, again this is something that I'm repeating in each and every technical analysis of this the S&P 500, that these are levels 3630, okay, and these are levels, these are not the, okay, these are not the absolute level, rather these are the zones. Support and resistances are not the absolute levels, these are the zones. So when I say 3630, I mean plus minus 10, and it will create a zone. When I say 3525, then plus minus 5, then it will create a zone. So these, okay, like 3630 or 3500, okay, these are the important support and resistance level. So we will add plus minus 10, and then the intermediate we will simply add plus minus 5 in order to create the zone. Support and resistance levels are never ever, okay, these are these are not the absolute prices, but these are the zones. And if you say, okay, then what is this, the 3630? So the 3630 is the median of the zone. So we have a zone, upper level, median, and the lower level of the zone, and this is how we create the zone. This is the upper, this is the lower, and this is the median. So median price is 3630, upper price is 3640, lower price is 3620. Okay, because see, we need to give some room to the S&P 500 and to the stock market to fluctuate. Okay, and that fluctuation can happen only and only when we create a zone. Okay, without zone, that fluctuation cannot happen, right? Anyways, so we were discussing this thing. Yeah, so 3625 can act as a strong resistance, means that we can see a reversal even from 3526. Okay, so we might be thinking that it is going to hit the 3500. No, because we already have, you know, one, this is the intermediate zone, okay, that has historically proven itself, and we can say, okay, 3525 it can work, okay, this particular zone. Okay, so all we need to look into is the intensity of this the fall. Okay, because immediately upon fall, sorry, immediately upon open, okay, we are saying that it is going to fall. If there come a heavy intensity, okay, if there come a heavy fall, in that case, yes, in that case we will assume, or we can accept that yes, it can come down to 3525. But if there comes a very little fall, very little fall, in that case we will have to wait, okay, until at least the 4-hourly candle is formed, okay, and then the final closing to see whether it will be able to come down or it is going to hold, okay, at this level. However, because the S&P 500 was able to hold for 6 days, for 5, 1, 2, 3, 4, 5, and 6. Yeah, mean movement like the 6 days, 5 or 6 days. This means that as of now, the chances of seeing the hold are not there, because it has already given a hold and it has already halted. This means that it is going to further come down. Simple, simple. And then only we will see a retrace. And guys, again and again, I am telling you, particularly to my community members, that a new sorry that a new low, new low is not yet there in the picture. The S&P 500 and the Dow Jones and the Nasdaq, these indices and the entire stock market is looking for the new low. This means that the S&P 500, the entire stock market, is going to further come down in order to find, or in order to define, a new low. So as of now, this is clear that the S&P 500 is looking for what? Is looking for a new low, Okay. So a new low can be formed, at this level 3525 or 3500, and if not, then we'll be thinking, and if not, then we can say somewhere around 3400. That will be there, the new low. But guys, when I say new lows and then the S&P 500 is coming down and it will come down, that does not mean that each and every day you will see the red candle. Although it is a bear trend, a strong bear trend, but that does not mean that each and every day you will be seeing the red candles. No, sometimes momentarily you will see the green candle, just like these candles. And these candles will give you an opportunity to what? To go bearish. Don't try to go bullish, because if you try to go bullish in this, the heavy bear trend, heavy sentiments, the heavy bear sentiments, then with just with a very little mistake, you can lose each and everything. Anyways, so always follow the trend. So this is the most likely scenario. Other than that, the second scenario comes into the picture, where the S&P 500 intraday, it retraces to what? Again the same level, the same zone. As of now, in order to move up further, the S&P 500 must first breach this particular zone. Without breaching this particular zone, without closing above this particular zone, S&P 500 is not moving up. As simple as that. So if you see an intraday, there is a reversal, a bull candle is forming. Then initially 3630 or the zone of 3630 will be able to hold this reversal. And if not, and if it try to enter, no problem, let it enter, not a problem. It will be moving towards what? Towards 200 week EMA, that is at 3683. Or it may be around 3681 in the coming week. Means plus minus $2 in the price, nothing else. So again, whenever you see it is struggling, then it will further come down. So as of now, until and unless, I repeat, until and unless a new low is formed or a new low is found, the S&P 500, the stock market, and the Dow Jones and the Nasdaq, everything will be coming down, everything will be bearish. Only and only when the new low is seen. Not only in the S&P 500, it may be seen in the Dow Jones, it may be seen in the Nasdaq. So whenever a new low is seen in any of these indices, then only we will be seeing a reversal, a bullish reversal that will be there for a week or so. And that will give you an excellent opportunity to make money in that, a short-term bullish reversal, and then go bearish, because the trend is bearish. So again, if you are my YouTube community member, then you need not to worry about these things, because I will be giving you the daily updates from Monday to Friday. And you can trade safely. So guys, if you have not yet subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And I've given the link to my YouTube community in the description of the video and also in the comment section. Whenever you want to join, you are welcome. And once you have joined, then you will see the updates in the community section on my channel. So guys, once again, like, share, subscribe, and comments. Comments means if you want to ask any questions, if you have any questions, then comment and I will try to answer your questions. And if you notice that each and every day we have the comment section. So there are, if you see, a lot of comments. And what these comments are for means my members, whenever they want to ask questions, they ask the questions and I answer their questions through the comments. So in simple words, this this particular post, the comments post, it is a treasure. Treasure of what? The information, the knowledge. What is going to happen? What will happen? How it will happen? What are the factors that will be affecting it? Each and everything is there. So this is actually the treasure in terms of the knowledge. So guys, if you have any questions that you want to ask, then you can comment and I will try to answer your questions. Okay, this is how we share the knowledge. Anyways guys, this is my S&P 500 weekly technical analysis for the week of October 3rd, 2022. That is from October 3rd, 2022 means Monday to October 7th, 2022, that is Friday.